What's up, everybody? Welcome to episode 44 of the Halving Report with myself, your host, Brad Mines. The price of Bitcoin is 48.7 thousand US dollars or 61.4 thousand Canadian. There are about 39 months left until the next Bitcoin halving, which means Bitcoin is in its bull market. And we've seen the price of Bitcoin up about 500% in the past year. Recently, a fan of the show reached out and wanted to learn more about mining and why it takes up so much energy. So I invited Eddie Wang onto the show. Eddie is the co-founder of Luxor, a multi-currency mining pool built for high-quality cryptocurrency communities. He's previously worked as a software engineer at MyEther Wallet and a product engineer for Sia Storage Platform. Again, thanks for coming on to the show, Eddie. I first want to ask you just to give an introduction for yourself for people that don't know who you are.
My name is Eddie Wang. I'm currently the CTO over at Luxor Technology. We are a mining pool, provide mining pool services for tons of different cryptocurrencies. Obviously, Bitcoin being one of the major ones.
For some of the new people that are coming into the space, could you just explain what is crypto mining?
I think when beginners come into the space, the place I'd point them to the most is probably going to be read through that Satoshi's white paper. It does a really great job of describing why mining needs to exist, right? And then from there, I guess the TLDR is what mining is really trying to solve is the Byzantines generals problem. And that problem, the kind of the story behind it is that you have this general, this captain, and you have these 6 or 7 other camps around the city, and you're preparing for an attack. And if you guys all attack at once, all 6 and 7 camps, and you're able to coordinate that attack, then you're going to win the war, right? And that's a good thing. But ultimately, you have to depend on this thing called the messenger, right? Because how are you guys you don't have a telephone back in the day. So how are you guys gonna, coordinate that attack together and make sure that you guys are actually attacking and the messenger isn't a spy, right? And really that's the basis of why mining exists. So now let's remove kind of that abstractness and talk about what concretely mining does, right? To me, mining is the physical tether for a digital currency like Bitcoin. It's physical tether to the real world, right? So what happens in mining is people buy these machines, and these machines have special chips in them, and they're called ASICs. Stands for application-specific integrated circuits. All that means is that chip by itself is pretty much useless for anything but mining that cryptocurrency. And by mining, what it really is doing the hashing algorithm, right? And if you compare that to something like a computer chip or a GPU, which stands for a general purpose unit, those things have a lot of flexibility to them. And they can do quite a few different things from, video editing to gaming, yada, yada. And therefore has a lot of different uses for its value. But now you have this chip. And the reason, by the way, that they make this chip application specific is because when you are focused on just a single unit of work or unit of operation, you can make that really, really efficient, right? And really, really fast. And so you have these machines that have a bunch of these chips on them that can, just do this one operation. And you've invested in this CapEx now, right? And then you have to place these machines somewhere with cheap power. And then this machine becomes almost like a money printer for you, in a sense, right? Because what you're doing now is you're in a way providing security with that compute power to the network, to this kind of decentralized network. And then in return, the network pays you in terms of inflation in a way. You can think of it as that is how new Bitcoin is created. And this creates this, entire ecosystem of people who are all kind of honestly incentivized to participate in this global network of mining. And yeah, that's a pretty beautiful system. I'm a huge fan of proof of work. I think it's honestly the more you learn about it, the more simple and elegant it seems as a solution to a lot of the world's problems.
Jumping back to the energy aspect of it, you see some people that criticize Bitcoin for using too much energy, but then you have other people in the space that say it actually helps for the case for cheaper and more efficient energy. Can you kind of just dive into a little bit more of how energy plays a role with crypto mining?
So, of course, at the end of the day, these chips, they need power to run. And when you do this at scale, obviously that's going to require a lot of energy. And these machines are generally fairly bulky and they take a lot of energy draw. So one of the big, criticisms of proof of work, and I think you see it every cycle, right? Like every 4 years, whenever there's like a pump, they'll say, okay, Bitcoin is bad for the environment. Look at how inefficient it is. Why are we doing all of this? Shouldn't we just? And, to me, I think there's two sides to it. So I think like it's good to recognize that, yes, Bitcoin is using more energy than if Bitcoin didn't exist, right? And I think I don't think I would disagree with that point. And let's go on from that and take a look at what is Bitcoin providing, and then look at the alternatives that we currently have in the system, right? So Bitcoin is giving you this non-state controlled currency that is permissionless, it's decentralized, and you can use all these buzzwords, but ultimately it's giving you this system, and that security aspect. The only cost you have is having that proof of work built into the system and using the world's energy. So that's number one, right? When you look at the alternative systems like our financial systems today, yes, maybe the Postgres database that Visa is running is only using X kilowatts an hour, but all the people that it has to support and hire, right? All the offices it has to open up. There's a lot of externalities that exist in our world that is attributing to energy consumption, right? And those, you could argue, far outweigh the energy use, the very minuscule energy use, in my opinion, that Bitcoin mining currently takes. So that's one aspect. If you look at, so my argument here is that if you look at the alternative systems that exist today, they're equally, if not more expensive and inefficient. It's just in terms of how you are abstracting, what is energy use there, right? And then, so the second point here is that Bitcoin being a physical tether to the real world, I personally, and I think a lot of people personally believe that Bitcoin is actually chose a really smart thing to focus on as its main physical tether, than this concept of energy. And I think it was Zach Herbert. He runs a company called Foundation Devices. We were coworkers back in the day at Nebulous, but he posited this concept. Or actually not him, but have you heard of the Kardashev scale?
No, I haven't.
It's super interesting. I learned about it only a few weeks back, and I think it's pretty relevant here. But the Kardashev scale is a method of basically you measure a civilization's level of advancement in a way, and this was invented by Nikolai Kardashev, right? In back in the Soviet Union, he was an astronomer there, and he posits that the measurement of a civilization's advancement is going to be based on the amount of energy that it's able to use, right? And so if you look at what's happening in Bitcoin right now, so first of all, for people who I don't understand the energy markets. I understand a little bit more now than I did, before I started doing cryptocurrency mining. But the energy markets are really inefficient, right? A lot of energy is expended and wasted into the atmosphere because energy is I call it an ephemeral asset. You got to use it or you lose it, and it's the same with hash rate. Super interesting. So with Texas, there was a crisis a week back, right? And the issue there was basically when you have energy grids, you have to estimate the demand of energy that people are going to use. You can't produce too much energy. It's not like, for example, oil. You can produce a lot of oil and just put them in barrels, store them away, and then when you want to use them again, just open the door and get them out, right? With electricity, you're constantly producing this energy. There's no real way to store it. Batteries are way too expensive to do this at scale. And essentially, you just kind of have to predict the load. So what happened is obviously when that load suddenly went all the way up, when it was really, really cold, power became really expensive because, we didn't prepare for that load. We don't have any type of battery. But then take Bitcoin. I think in some of your previous podcasts, you've talked about things like people are, burning tires and melting tires and making them into energy. There's also flare gassing right now in the industry where people are taking this flare gassing. I didn't know about this too. Literally a year ago when I first heard about it, I thought it was insane. So basically oil companies apparently produce a lot of gas that they just need to burn up in order to, ensure that their operations are still running smoothly and they're meeting, safety criteria, et cetera. And because there's no way to really capture that energy, they just flare it up. They literally burn a bunch of, CO2 into the atmosphere. It's terrible for the environment, right? But here's something super interesting about that negative externality. It's that people are literally paying you to take that energy away. And when we talk about cryptocurrency mining, at the end of the day, cryptocurrency mining is a zero-sum game. And what that means is that ultimately there's only so much block reward, right? You can buy all the machines in the world, but at a certain point, you're not going to be able to break even on these machines anymore. There's like almost like a natural equilibrium where it doesn't make sense for people to invest into new machines unless, Bitcoin goes up in price. And inversely, people have to also account for Bitcoin, dipping like it has today, and making sure that their operations are able to kind of stabilize and pay for their mining farm if they go into the red for the next year or two potentially, right? So when we're talking about these zero-sum games, you then kind of look at like what are the metrics or the components that make up the cost for one of these Bitcoin miners. And you realize that electricity is obviously going to be a big component to that. And that's where it gets really exciting for me. Think about this. You have this energy capacity that people are literally like, take it from us. We can't use it. I can't send energy to anyone, to anyone like around the world because I have to kind of use it in my local area, right? I can't store it. So I guess I'm going to burn it for now. But if there was a way to take that energy and store it into something that was, valuable, that's pretty cool, right? And people can make a lot of money off that. And you could use that money for, for other things. And that's what Bitcoin mining kind of is, right? It's kind of this battery. I know some people love that word, some people hate that word, but in an abstract level, it's kind of like a battery where it captures the value of this like potentially wasted energy. And by the way, the wasted energy that they're converting is now going to be a lot more efficient because they're using processes now to extract that, what would have been heat and, fire into electricity for these machines. So ultimately, I think I just learned about the Kardashev scale, but I think that's a great way to think about Bitcoin mining. The more energy we use, the more we think about how do we get energy at a cheaper cost, the cooler things we can do for our civilization in the wrong way.
Are you saying there's a lot of opportunity now with oil companies and having this extra energy that they have and in their local area, it can be produced into cryptocurrencies?
Yeah, so there's a few different industries that are interesting. So flare gas is a big one. I know there's like a lot of companies like, Crusoe is one of them, Crusoe Energy. Basically, they work with these oil fields, and whenever they have to flare gas, I think that what the industry term is called is gas to hash. So you're taking that gas and then turning it to hash rate, and ultimately turning that into Bitcoins. And that's a way of basically capturing inefficiencies in our energy production system, turn those inefficiencies into something better for our environment, but also just in terms of for our economy. And then I think another one, and this is actually a great resource, just came top of mind, but Nick Carter wrote an article called The Last Word on Bitcoin Mining, a very good article. And in there, he talks a little bit about, this concept of capturing energy. So it's not novel to Bitcoin. Iceland did the same thing so what I believe they did was aluminum. So aluminum apparently takes a lot of electricity to manufacture, right? And Iceland had a lot of energy, of course. So they're an energy rich country. So what they did was a way to kind of capture that value was they created aluminum plants and shipped a bunch of aluminum to the world. And a lot of economists call them geniuses for being, finding a way to capture that energy. And the same with a lot of these smelting plants. Like, for example, I know there's a plant in New York that turned into a Bitcoin mine because it made the economic sense. So there's just a lot of areas in the world where I think a lot of energy is wasted. And Bitcoin naturally is going to target those areas because the energy there being produced is, at a negative cost basis, if that makes sense. They're literally losing money creating this energy. Another great example is a lot of the Bitcoin mining is in the Sichuan province in China, which basically what happened was the government invested in a lot of hydropower infrastructure. So much so that there's basically an overload of energy available over there. So naturally what ended up happening, and even today, most of the Bitcoin mining actually exists in the Sichuan province. And it just because it's a zero-sum game and miners are going to be attracted to cheap sources of power.
Are there any opportunities for individuals investing into mining traditionally with hardware and equipment that would still be profitable today?
Depends on what you're looking to get out of it, right? If it's purely in terms of you're trying to do make money off of this, what I would say is mining at home, you're probably not going to make money unless you live in a very specific area where they give you really cheap electricity rates, because you're competing with people who have farms that get power for 1 cent, 2 cents kilowatt hour. So, and if you compare that, when I lived in Boston, I remember my rate being something like 28 cents a kilowatt hour. And that's because as a residential customer, you're generally not going to be using that much electricity. But that doesn't mean you can't make money in mining if you're interested. Co-locations is very popular. So if I was to do mining as a retail or a hobby miner, I probably would scope out for a good farm. Like Hash Rate Index has a list of farms that offer co-location, and they list their prices. And you basically work with the operators there, and they give you kind of like real estate, right? They give you a space in their place. They give you a slightly higher fee than they charge. Than they pay for electricity, and then that's how they make their spread, and they help you operate that machine. And will you make money off of it? That's a great question. So mining happens in cycles, booms and busts, right? Just like gold mining, or like back in the day, anything. The boom and bust cycles come and go, and if you capture that boom cycle at the right time, you're definitely going to make money on it. So I remember back in like 2017 when I bought my, I want to say S9s. I think they were S9s back then. But basically, I bought these machines, and that was right when Bitcoin was like at 3K or 4K, and then went up to 20K in that summer and fall. And at that time, the machine value just on the secondary markets flipped by the same price. So, and the same cycle is happening now, where machines are much, much, much higher. We're talking double, triple, quadruple what they were just a year ago, right? So, as a retail miner, you're no more advantaged or disadvantaged when it comes to those cycles. And if you capture that at the right time, that's a good bet. But then like the disadvantage comes in terms of when we're talking about scale, because, when you're buying 1,000 machines, it's much better to account for the margin of error of like how many of these units are going to be defective. What's my agreement with Bitmain or these different ASIC companies? When I'm a big customer, I'm going to get a lot of other terms in that contract, right? And I get a lot more, I guess, like a lot more consideration is put into kind of the whole end-to-end life cycle of these machines. When you're buying one or two machines, that's harder to like manage. So what if, for example, what if a machine breaks and you bought two machines? Now only 50% of your units are working. So because of that, the physical tether, if you will, to the world, you deal with some of the physical disadvantages, right? Like if you were doing proof of stake, you wouldn't have to worry about that. I guess there would be other problems you have to worry about, but at least it wouldn't be broken machines.
For sure. And talking about the boom and bust cycles, how would you say the halving has effect on the boom and bust cycles?
So boom and bust cycles are definitely more correlated, I would say, with the market, just the market prices. The thing about the halving is that there's the joke that it's already priced in, right? But for miners, it has to be kind of quote unquote priced in the sense that they need to be everyone knows when the halving is going to happen. It's not some like shockwave, black swan event, right? So miners generally have like preparations for basically, you can think of it as like savings accounts where they're preparing for a drought, a bear market, and they have to be able to work through that. And the ones that don't do that, what's going to happen is that they blow up and they go bankrupt because they can't. Like you're not making any money unless you have free power, and some people do have free power, and that's one way you can operate a mining operation. But in the long term, assuming that power does cost money and is providing value, then you may potentially not be making money with your machines. So it's a constant cycle of not only preparing for these boom and bust cycles on the market, and then the second factor I would say is like the preparation in terms of the CapEx, which is like, you have to spend a bunch of money up front to buy these machines, especially if you're doing it at scale, right? You're spending millions of dollars and choosing like the right points in time because these chips are getting better, right? TSMC keeps improving their process. It means these chips it's kind of like a weapon war. I don't know how to describe this, but it's kind of like, or an iPhone is a great example. iPhone 7 comes out, then the 8 comes out, and the 9 comes out. These cycles will keep coming. So people have kind of like a negative premium on hash rate, where you expect the network hash rate to rise. So you kind of have to figure out, okay, if I'm going to spend $5 million right now, do I buy the current generation of machines, or do I wait to keep my money and wait for like the next generation of machines that comes out?
What do you think the biggest news is to happen in the Bitcoin or cryptocurrency space in, say, maybe the past year?
Past year, man, that's a good question. So something that I've realized working as a I guess like on product and technology a lot is that you can really get into the weeds of things. Like these days I'm working on service meshes and Docker containers and stuff that sometimes I feel like, oh man, am I even keeping track of mining news anymore? But okay, let me think about this. So there's a few interesting events that happen. I think Samsung's fab is pretty interesting in the US. And just like the whole like geopolitical climate is super interesting for Bitcoin mining because you have So like the tensions between China and the U.S. aren't great right now, right? And we'll see how things progress. But one of the things that one of Trump's like taxes really affected the mining industry in the sense that if you bought a machine from China and wanted to bring it to America, it was a huge customs tax on it. So what's happened is like a lot of the industry players, they want to sell their machines to Americans. A lot of Americans have a lot of money and are willing to pay for a lot. So they've been basically trying to figure out how to make their machines in other countries. And that's a good thing for decentralization, to be honest. So like they're kind of creating factories in outside of China, let's say Malaysia, maybe to assemble them and then ship them over to the US. And then you have also companies like Samsung who are investing a lot of money in American fabs, and what I'm hoping for is to have an American-made Bitcoin miner. Because like one of the reasons I believe that hash rate is so concentrated in China, energy obviously being one of them, but I think like there's a lot of cheap energy available in the US. But the biggest problem has been like getting access to these machines and being able to produce them, here. The geography is, still very real thing, and having access to the machines, a month before another competitor in the US is going to be a huge, competitive advantage. So the biggest news probably these fab openings. Other mining news. Mining is moves very fast. I think like under the hood, it's not news per se, but what I've seen in the last year is like the way people have started scaling just mining companies, and also the complex stakeholder structures that have emerged in the past year is super interesting. Things like ASIC financing. It's not sexy, right? It's not going to make like CoinDesk news that much or the front page of CNN or whatever. But essentially, ASIC financing has allowed an avenue for these miners to have like capital investors come in. And these capital investors are more well attuned with the mining markets, and therefore can make better kind of like risk models. And what they've done is create a lending model where mining companies get access to capital to buy these machines, with the intent that these machines are backing, in a way, backing the loan itself. So yeah, super interesting stuff there. And it's just allowing, I guess like the kind of the broad thing that's happening is people are trying to figure out ways to better handle these boom and bust cycles so that more money can pour into the mining ecosystem. Because like there's just too much risk right now, right? For someone to be like, let me give you $100 million to buy a bunch of machines that, Bitcoin goes back down to 20K or 10K or 3K, then the company blows up and I lose my investment. We need instruments, financial instruments, and also different types of stakeholder strategies to make sure that risk is spread out. And also you can kind of just have more to ensure that this company is going to be here for the next 10, 20, 30 years.
Now, you were a contributor of Sia Coin, were you not?
Yes, I worked with Nebulous Labs for just about 2 years.
Is that project still ongoing?
So I'm actually the chairman of the Sia Foundation. David and the team are incredibly smart. I learned a ton from them. And in fact, I actually credit Luxor's, a lot of our success to Sia, because this is a little Easter egg, but Sia is like an Egyptian god. I think it's like the goddess, or it's anyways. Sia is like an ancient Egyptian god, and Luxor's entire brand, as you know, Luxor is like an Egyptian city, was based kind of off of Sia at that time. So that's a cool little, and we started kind of as a Sia mining pool. Mm-hmm. And that's kind of where we kind of bred our skills as Stratum developers. But yeah, that Sia is still going on. They're it's a really cool project. They're currently, heads down working on Skynet, which is their way of kind of decentralizing the internet. And I think it's gotten a lot of traction.
Can you expand on Luxor team and your role?
Sure. Yeah. So the Luxor team, maybe it'll be helpful to talk about the backstory and how this all came into being. So first and foremost, I guess I should have said this at the beginning. I'm Canadian. I went to school over at Queen's University, so Queen's Commerce. And during that time, I was lucky enough to have an internship at the Scotiabank Digital Factory. There I met a few great folks, Moody, Kevin, Eliza, some really great friends. And also I happened to just sit beside the blockchain team that they had there. So that was really what it gave me exposure to blockchain. And, through that internship, I started getting kind of into the rabbit hole of cryptocurrency more and more and more. I thought the idea of capital over IP is super exciting and super interesting. And then one day on on one of these subreddits, the Saya subreddits, I kind of found Nick's GitHub repo, and he was working on something on Saya, and I thought that was super, super interesting. What he did, wanted to help him out, and we started just working on like projects together. There was no like intent to start a company at that time, and I believe the only reason we created the company like incorporated it in Delaware was because we needed a way to accept like consulting payments. So because we were doing kind of like projects for blockchain companies, Sai being one of them, and we just needed a way to have like an official name to kind of receive money in the bank. So that's why we started it. And then around that time as well, we started getting interested in Sai mining and just the mining ecosystem. So started working on a mining pool, and then also winter break was over and I had to go back to school. So went back to school, and for my winter courses, this was kind of a hack I found, but turns out my school had an entrepreneurship class, right? And this entrepreneurship class allowed you to go and build your own company. So I was like, oh, damn, I feel like I'm kind of already doing that. So like, why don't I just take that class, and then instead of going to, doing random like schoolwork, I can just focus on building Luxor, right? That would be a pretty sick experience.
That's perfect.
Exactly. So I signed up for that course, and lo and behold, one of and Ethan and I have been friends. He also went to Queen's Commerce. I remember back in first year, we were at like Frosh Week, and in one of the rooms over in Vic Hall, he was talking about how he wanted to be an entrepreneur. And he had a really good vibe. Ethan's a great guy. And basically we connected, and he also happened to be in the same entrepreneurship course. So we were like, let's team up. You can come take a look at Luxor and what we do here. I think Bitcoin's pretty cool, and you'll be pretty interested in it. And then Guzman, who's the other co-founder, he was actually, he's from Uruguay, and he was just happened to be on exchange at Queens. So it also happened to be that same entrepreneurship class that we were all in. And he showed interest in crypto, and Ethan was like, yeah, we need a few more members, so why don't we get him on board as well? So that's really how like the core team initially formed. And then right about like a week after that entrepreneurship class started, that bull market started creeping up on us. And, things started kind of going fast paced from there.
Wait, so when did you graduate from Queens?
So I graduated in I want to get the year right. I think 2018, I want to say. Oh, no, wait. I started in 2018. No, I graduated in 2018. Yes, I started 2014 and then I graduated 2018. I'm 24.
You're 24. Okay. I'm
24 years
Eventually, it all just becomes a blur.
It just, honestly, once you graduate, things become such a blur. It's not even funny.
For sure. So, Eddie, when you're not knee deep in crypto and mining and everything else, what other things do you like to do?
I'm a huge fan of indie hackers. So, like, I really like the idea. And I mean, Luxor is kind of, you'll get why I am working on Luxor now, but I really like the concept of building a business that generates cash flow. And kind of the indie hacker movement, I don't know if you know about like Peter Levels and like Nomad List and all of that, but basically there's this movement of creators on the internet that are like, hey, we can build a business and the customer is now the world because we're on the internet, and we can build a small business and we can have it generate money. We don't need to go through every aspect of like what Facebook and Google did, right? I'm not trying to build, it'd be great if we can build $100 billion company, but also I'm not like personally comfortable spending $10 to acquire a customer that will give me $1 in revenue just for growth, and rather kind of thinking through how do we create a business that takes like stepwise steps to success, kind of like what Shopify I think has done. So sorry, you're asking me. So on my free time, usually, what I'm thinking about is just like, how do you scale a business without having to pour money into it? But also studying the network effects of these businesses that do spend a lot of money, because there's a lot of lessons that we can learn from them. The ones that have had great success with it, I think Uber has had like phenomenal success with it, where even though they might have been losing money for a long time, the way their strategy dominated just the entire game is insane. And then you have some that have been less successful, depending on who you talk to, like WeWork, right? And it's just about kind of analyzing the business models there. Lots of great newsletters that assist me in summarizing that information, but that's what I geek out on a day-to-day basis. And product building. So Indie Hackers, I specifically pointed out to, is because their podcast talks a lot about the nitty-gritty parts of building product. Product, it doesn't have to be about crypto, right? Product is a lot of the same base fundamental skills. like knowing, how to write a React app, or how do you set up a proper architecture to host your apps, things like that. And I find that the indie hacker, the guests on there are very tactile in their approach and not very fluffy. And I appreciate that because it gives me some insight into how others operate their business and build their product.
Do you have any books you could recommend, or do you have any favorites?
Let me pull up my iBooks. This is a cool question. So one I really liked, this is actually a cop-out because I know this is super mainstream, but Atomic Habits was really good. It's kind of, I'll say like the thing about books that I don't like is like a lot of them are fluffy, especially like self-help books, because the thing is they need to sell you a book, but the content might only be worth like 2 chapters. So what they end up doing is they end up sending the next 8 chapters, trying to fill that in with examples and metaphors, and it's kind of a waste of time. But Atomic Habits was really good. I think it kind of like, it's a very generalist book, but it kind of talks about how do you take steps to building good habits that are more repeatable. James Clear, smart guy, he knows what he's talking about. And aside from that, I think, man, a lot of my books are technical. So for the people who are technical out there, I'll make a recommendation there. I'm probably targeting like a very small subset of people, but DDIA stands for Designing Database Intensive or Data Intensive Applications by Martin Kleppman. Very, very good book on anyone who wants to deal with processing big data, wants to understand more about how your favorite, search engines, social networks, all these apps work, because underlying hash rate share measurement and tweet processing is actually largely very similar in terms of needing like a pub subsystem, needing Redis caches, things like that. So DDIA is a very solid book for any practicing architect out there.
What about for people that may be interested in technology but not as technical? Do you have any?
So if you're interested in technology in general or product building, a classic is always like zero to one is always a classic. I go to for startups. I think it touches on a lot of the thinking around at least the VCs out there. And there's another great book I think that might be a little bit esoteric, I guess, for some people, but Thinking in Systems by Donella Meadows. So systems thinking is something I think is super important, and a lot of people kind of stuff it under the table, but it's what forms a lot of these great companies and great technologies. Because if you think about technology companies, a lot of them are based on network effects, right? Or in a grander scheme is based on a complex system working together. You can talk about small systems. As an example, I can give you is Dropbox. A small growth system they had was like how the whole flow to getting more storage space back when they were growing worked, where you refer a friend, you get 2 gigs, you refer another friend, you get another 2 gigs. And that itself is a system that gives you a positive loop for growth. And Thinking in Systems, what this book touches on is just like, how do you think about, first of all, real physical systems in our world, right? Like our environment and whatnot, but also in terms of like business, how do you think about your business as a system? And I think that was really helpful in framing some of the kind of the strategies, I guess, I personally use on a daily basis when I think about, what should we do in the company and largely in my life.
What about crypto Twitter follows? Do you have any favorite?
Crypto Twitter follows. That's funny, man. Twitter has gotten so unproductive to me that I hate this, but Twitter is addicting, right? My favorite follows Nick Carter. He has some very spicy takes, and I like reading his work. Lynn Alden is also so really good. Pomp is a classic. Yep. Just because of his shit posts, and obviously Sam as well from Sam from FTX. You guys don't know who I'm talking about. But I think like what's interesting right now for me, I follow a bunch of, you'll find this funny, but I actually follow a bunch of DeFi guys. I just find that entire space like interesting to read about. Like I personally maybe I'm too dumb to like understand how everything works together in that space without, crashing like a deck of cards. But I find it so fascinating, man. And I think like, this one guy called Noah had a very good comment where it's like, in crypto, you want to always have a beginner's mindset. And I'm by no means like, I love Bitcoin. And Bitcoin is if people were to ask me, I'd probably say I'm a Bitcoin maxi. But at the same time, I would say I'm a Bitcoin realist. I recognize there's a lot of innovation happening outside of Bitcoin, good and bad, right? But it's just so interesting right now, all the stuff that's happening with, synthetics and Thor chain, yada, yada. So I find those tweets, I guess, very interesting. But if you're to ask me, Ryan Selkis, that's another one. Ryan Selkis has a great view and perspective, I think, on Bitcoin as well as a lot of other altcoins. And then if you want a troll pick, Udi, you know who I'm talking about?
Yep.
Udi Wertheimer. He always gives me a laugh. So,
you said that you can be considered a Bitcoin maxi. I don't know. I tell people that are coming to the space probably keep at least 90% plus into Bitcoin. Would you say it's a okay recommendation, or do you say something different?
I am almost exactly that. So probably even more than that potentially. So I'm very heavily weighted on Bitcoin, and it's not because I don't think. And here's the difference. I think there's probably more money to be made outside of Bitcoin. I will say that in the short term, and especially with the volatility in the markets, I've known a lot of friends and colleagues that made an insane amount of money. I personally know, at least for myself, I'm a really, really terrible trader. And I'm an okay investor. We'll see, right? See how I guess my investment in Bitcoin does. But ultimately, like what I'm interested in is building product. So if my strategy was investing in these DeFi tokens and all these yield farming, a lot of my just like the capacity in my brain would probably be focused on that. And that's not a good thing for me. So that's why personally my strategy is just like dump it on Bitcoin, because it's the simplest bet you can make. If anything wins, Bitcoin is going to win alongside with it in the crypto universe. And Bitcoin Maxi is like saying you're a Christian at this point. That's how I see it, right? Like Christianity is like the dominating religion, but it'd be dumb to say there aren't other religions that exist, right? And if you think about crypto, it's a lot of people are making kind of like similarities between crypto and religion, right?
Yeah, and now that you mention it, it's exactly what it is. It actually sometimes is disappointing how much inner fighting there is within the community, but then you do see everybody kind of conjoin together when outside forces attack, which is also nice to see. Do you see similar things, or what do you think about that?
No, exactly. Like I find it hilarious, but also very enlightening that like things like remember the block size debate, right? Huge, like, and even now you're still seeing the effects of that with BSV and Bitcoin Cash. And really what they're arguing over was like, do we toggle the spit value a bit higher or not? But there's the ramifications to all of this, right? And we're trying to learn about how governance should work in a decentralized community and how these communities should form. Ryan Selkis said, when you bet on Bitcoin, it's a bet on money. And when you bet on Ethereum, it's almost like a bet on technology, right? And I think that's an interesting take. I would extend that further and said, when you bet on Bitcoin, you're betting on money. And then when you're betting on literally anything else, you're kind of betting on technology, right? And that's what Bitcoin really is, or cryptocurrency. It's kind of this balance between what is money, or how are we redefining this concept of value capture and savings, and then the technology part, right? Which is obviously Bitcoin is digitally native. My grandparents always ask me like, where is this coin? Like, where can I see this Bitcoin? I was like, I don't know what to tell you. It's a bunch of numbers, and that's the other half of it, which is the technology part. It's just that the Bitcoin core team and its community has largely focused on I think a lot of the more philosophical aspects of how do we make good money. And that's why they've made some of the decisions they've made, whereas other chains kind of see it as more, maybe we don't need all of this decentralization, right? Having 8 different validators on a proof of stake system arguably is still better than a single validator system that we have today, being a single company backing it versus 8 companies, right? Or not 8 companies, but 8 VCs. But yeah, I digress. I think there's like levels to this, and it's just very interesting to see all the different camps that have popped up because of like minor differences in the approach. And that's why I say Bitcoin realist, because ultimately I think that everyone recognizes that good money is an incredibly important narrative. And I think Bitcoin is absolutely going to continue to dominate there. But there's lots of cool innovation happening in the space, and it'd be stupid to ignore it.
Eddie, you've given my listeners and I a lot to digest, so I'm going to open it up if you have any closing comments, or if not, maybe just let us know where to follow you and learn more.
Yeah, I guess closing comments is if anyone in the space is interested in Bitcoin, in mining Bitcoin, Luxor is hiring. So if you're a developer, if you got BA chops, shoot me an email at eddie@luxor.tech or give me a follow. I'm Eddie plus Wang on Twitter. And if you have questions on mining and stuff, obviously always happy to chat. And yeah, had a great time here, Brad. Appreciate it.
Thanks for listening to episode 44 of the Halving Report. Be sure to like and subscribe to the show. Connect with us on social media at Halving Report, Stack Sats, and we'll see you back next time.